just for those of you who don't know me, I am a trend follower. I believe in keeping things really, really simple. Here's one of the stocks that we're long, NNE, and it was an IPO pullback, and it took off in here, and then it pulled back. And I'll give you parameters here just 1 second. The entry, as per my trading service, was 880. Initial profit target was 1180 and a stop of 6. Now that sounds a little crazy, but that's what it called for due to the volatility of this particular stock. And we're looking for initial profit target of 1180. And the way the methodology works is I have a hybrid approach to money management. And that's because pure longer term trading is very risky and it's not very accurate. You'll find that longer term trend following is about 28% correct. And the drawdowns could be absolutely abysmal. We love to read about traders like the turtles, but what they don't tell you, kind of the Paul Harvey rest of the story, is things ended badly for most of them due to the drawdowns that occur with longer term trend following. So my way to solve for that, so to speak, is to take partial profits and get my stop on the remaining up to break even, and then hopefully stick with the stock for a long, long time. So we're closing in on a profit target on that one, hopefully. I know you should never use the word hope soon. So let me show you one more, and we'll start looking at your charts. So just the ultimate goal with this is to capture a longer term trend. And here's one we got in way back here, and we rolled it out, and we took partial profits, I believe somewhere in here, and then we stopped out of the remainder right around there. And I forget what percentage that was, about 60% or so. So this is the ultimate goal. We held on to it for almost a year. I'm slotted as a swing trader, but I will stick with stocks as long as they move in my favor. And just give me 1 second to get used to the Zoom so I can see the next questions coming up. Okay, so Dave, do I need to look at the chat window? Yeah, I think I've got it.
Yeah, if you can't see it, if you hit Alt H, it should show up.
Okay. Okay, well, while we're
Just
waiting on
you see
those,
the
yeah, test. Okay.
yeah, okay. All
So
right,
while
so
we're
yeah, everyone go ahead and type in a symbol for Dave.
So basically, what I do is I keep things really simple, and I'll show you a couple things real quick while we're waiting for some symbols. Oh, okay, we got one here. We'll do that real quick. PHM, I think that's a home builder. Let's take a look at that. Yeah, that's Pulte. Now, the first thing that I'm seeing here, whenever I look at a stock, the first thing I want to do is I want to take a look at the net price change. So where are we? About 111 or so. So let's draw a horizontal line. And we can go all the way back to March. Okay. So I believe in keeping things just ridiculously simple. And you could see that in this period of time, we hadn't made any forward progress. Longer term, yeah, it's still an uptrend. And if you were long from a long time ago, possibly you'd have a wide stop and you'd be riding out that uptrend. But for now, there's really nothing for me as a trend guy. So you can see that we've gone sideways and it's just been consolidating in the sideways range. So for me to get excited about it, it would have to either begin to break down from this range as a potential short, or obviously break out of the top. And then if you take a look at home builders in general, you always want to look at the sector when you're looking at stocks. So I think it's what is it, XHB? So we take a look at the home builders, and you can see the home builders sort of the same thing. If anything, they might look a little bit toppy in here. So as far as the PHM, I would go ahead and pass on that one. Lulu. I have fond memories of Lulu. I remember one time when it first came public. I don't know if we can go that far back quickly on the chart. I made fun of the stock because they made yoga pants, and I watched it go up about 40% afterwards. And then I realized I was confusing the issue with facts because it doesn't matter what they do, it matters what the chart says. Okay, the only thing I would do with this would be possibly a short, but right now I don't see any reason to short. Now, if you look at this stock longer term, you really want to look at the personality of the stock you're trading, and the stock's personality reflects the personality of the players. For instance, like GME, you've got it's a meme stock, so people get all excited about it, go straight up, and then they all sell, they go straight down, rinse and repeat. And there's really not a whole lot of structure to something like that to trade. So Lulu is sort of all over the place. It looks like it makes a huge gap every now and then. And if I had to guess, that's probably on earnings. but then it doesn't do much afterwards. So it gapped higher here, ran up a little bit, came right back in. It's all over the place. If I had to do something, I would possibly short it. But the problem with that is, number one, the overall market is going up right now, so you don't want to short anything as a general statement, unless maybe the sector is going down and the stock is going down and you really like it. But you have a lot of trading below where we are now. So if you did short it, your gains would probably be limited due to all this consolidation in here. So you want to try to find something like, let's just pull up stocks in the current portfolio. So that aforementioned NNE, you can see this one kind of went straight up and then it pulls back a little bit. And then knock on wood, so far it's going straight up again. Let's see what else is in the portfolio real quick. ULS, you can see once again, notice that this one, it kind of gradually worked its way higher, and then it began to take off, and then it pulled back fairly deeply. Entry on this one was 40.25. So right around here is where we got in, and we're a little bit profitable, nothing to brag about just yet. But the point I'm trying to make is you want to trade stocks that trade cleanly and not look like electrocardiograms, okay? COLL, columns, I don't know what they do. Let's see. Oh, Colligram, pharmaceutical. All right, let's pull this up. Okay, so once again, what's the major trend here? Well, right now it looks like it's down, okay? So we were up here in 40-something in March, and where are we now? We're in June, right? Middle of June. And you can see now it's at 30-something. So it's dropped about, what percentage is that? 20% or so, round numbers. Yeah, 25% over that period of time. So if anything, it looks like it could be in trouble. But I wouldn't short it due to aforementioned reasons. The market's going up, right? But this is not good when you have a big gap like this. A lot of people believe that gaps will get filled, and that's not normally the case. In my experience, I found that gaps more often than not become an area of resistance or support, depending on where they are. So notice that we did kind of push into the gap a little bit, and it got thwarted. And so far, it's rolled back over. It doesn't have anything below. It doesn't have any support for a while. So if you did short it, it's got a long ways to go. But it's been mostly chopping around in here as of late. So I would go ahead and pass on that one. Okay, amps, and then coin is next. Okay, now once again, let's do the net price change. And we take a look at this one, okay? Where are we now? 445. Let's go back in time. And you can see we're about 4.5 or so, going all the way back to, once again, March. So we have 3 days, 3 weeks of mostly sideways trading. So there's nothing for me there. And even if you did buy it, notice all this overhead supply. So overhead supply, nothing magical about the technical analysis I do when you type symbols. Okay. There's no mumbo jumbo. It's really simple. My nickname in the industry is Trend Following Moron. In fact, my X handle is T Following Moron, and please follow me. But anyway, these little lines in here, this is nothing magical. These are actually trades that people made. I know, duh, right? And so there's a lot of trading above where we are. So anyone who bought in this area is going to be looking to get out at break even when and if it gets there. Now, one thing you want to do is, of course, you want to do your sector analysis every night. This is what the semiconductors overall look like. And if you draw a straight line, which is mathematically equivalent to linear regression, if you try to intersect as many bars as possible, you could see you could intersect nearly all of the bars. Now, that's what's called persistency. And if you find stocks with persistency, that's one of the best things to look for. And look for persistency, and then look to play possibly a pullback once you find that persistency. So if you have an overall sector like this, you should be able to find some stocks that don't look like an electrocardiogram. In fact, let's just take a look at the Qs real quick, and I'll show you a little system that I got along with the Qs in a little while when everything slows down just for a second. But even the NASDAQ composite, or the Qs in this case, but we'll get to the NASDAQ in 1 second, have been heading higher for a long, long time. And as a general statement, Notice how you've got this nice thrust higher, and then you got this pullback. And then this little bar here is a pattern I call a TKO, a trend knockout. And the thinking there, and again, everything is conceptually correct that I do, everything has a reason behind it. But the thinking there is the sell off scares out some nervous longs, some nervous Nellies, and then sucks in some eager shorts. Now, when the market begins to rally and takes out that high, you're able to capitalize on the predicament of those traders. So the point I'm trying to make, and maybe something you should walk away with today, is look for perfection in your setups, look for persistency, look for acceleration, and avoid those stocks that are either A, in a downtrend if you're looking to buy, or B, as I said quite a bit, look like an electrocardiogram. All right, let's take a look at coin. So coin, again, let's take a look at the net here. Okay, we're at 237. And we can go, once again, all the way back to March. You can see we didn't make any forward progress. Now, going back in time, you can see it did kind of take off and then pull back. In this case, this pullback would have been too deep for me to trade. But in general, it has obviously worked its way higher for quite some time. But again, we've got mostly, or we have, I should say, mostly sideways movement for quite some time in here. If anything, I would be possibly slightly bullish because it looks like it's trying to bottom out these high levels, kind of like a high level cup and handle, but it's not something that I would trade directly. So again, it's been mostly sideways as of late. Now, let me just show you something, a couple of things real quick. Let's take a look. We'll take a look at the Qs, and I also want to show you a couple little simple little indicators while we're at impasse waiting for the next stocks. Okay, let me get this shared. Oh, here we go, VNT. All right, we'll come back to that. VNT. Okay, once again, let's just see where are we now and where were we. So VNT, you can see back in April was at fairly high levels, okay? And then once again, we lost, what, about 12, 18% of the value. We could measure that real quick. But just eyeballing it based on today's where we were, okay, 16%. So not bad for eyeballing it. Yeah, keep them coming. Keep them coming. So you can see that this stock is mostly headed lower as of late. So I don't really see any reason to rush out and buy this particular stock. COR. Okay. Now this one, you can see that it's a little bit all over the place, or kind of all over the place, okay? And it also has a lot of gaps. You can see it gaps up, and then it gaps down. I'm not sure if that's earnings or not, but for some reason it tends to gap around quite a bit. It gaps up, everybody's all excited, and then it implodes again. So the personality of stock is a little bit wide and loose, although we did trend a little bit back here. But you can see it's pushing into this mountain of overhead supply. So anybody who bought this stock before this gap down is now looking to get out at break even. So again, with my form of technical analysis, I'm reading the psychology of the market. And by the way, your own psychology is something I spent a lot of time on, is very important too. And I've written 3 books on trading. I'll actually give them to you. If you go to daylearner.com/free book, I think it's all one word, you could put your information in and I'll email you those books. But if you read the psychology in there, you'll know that your own personal psychology obviously is extremely important when it comes to market. So I would leave this one alone based on the amount of overhead supply. And yeah, it's worked its way higher as of late, but a little bit longer term, you can see it's still kind of sideways. If anything, it sort of looks like a major top is still the place on that one, but there's no reason to rush out and short it. All right, let's take a look at BRK. Okay, is that Berkshire Hathaway? Okay, that's probably a bad tick there. Or BRK. Is there another symbol we're supposed to be looking at for this one? I doubt it's Berkshire, is it? We'll come back to that. Let me know And then in the meantime, we'll take a look at Philip Morris. Now, if we're just looking at the most recent action in this, this looks like a short to me. And I have a pattern I call explosion gap pivot. Earlier, I talked about the fact that you gaps can be resistance and gaps could be support. So in this case, it's not all-time highs, but if a stock makes, see like back here, how it made all-time highs, and then you had a gap down, okay? So if a stock is coming off of all-time highs, or in this case, I guess multi-year highs, it would be a much better short. So if this was all-time highs, or at least, let's say, 5 or 10-year highs, I'd be a little bit more excited. But if anything, I'd say this could be a possible short. Again, I wouldn't personally short it. It just doesn't look that exciting to me. And given the nature of the market right now, I don't see any reason why you'd want to be shorting anything unless you really, 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 really liked it. If it was the mother of all setups, if one of these high flyers began to roll over and look like it was getting ready to implode from what I call a trend transitional pattern, such as a bow tie or a first thrust. Let's see if we can get a bow tie on here so I can show you what a bow tie is. So a bow tie is simply you take 3 moving averages, 10 simple, a 20 exponential, and a 30 exponential. The 10 simple here is bluish or cyan. The 20 is red, and the 30 is orange. By the way, when we get to another impasse, I'll show you how the 30-day EMA can keep you out of a lot of trouble. If you didn't buy any market, and right now it works especially well in crypto, especially these altcoins. I have another name for them, but I don't know if our rating is PG-13 or what here. But the 30 EMA can do a really good job of keeping you out of bad markets and also can help you keep you in to good markets. And as a general rule, if you never bought any markets, unless it traded above the 30 EMA, it would keep you out of a lot of trouble. All right, let's take a look at TEO. Okay. So let's see what we have going on here. Let me get a cleaner chart. Let's go back to this one. Okay. So once again, we sort of have that electrocardiogram, and you guys are mostly younger than me, I'm guessing. I'm getting older and older. But there was a comedian called Jackie Mason, and this is what I would call a Jackie Mason chart. It's up, it's down, it's up, it's down, it's up, it's down. Or again, it looks like an electrocardiogram, okay? Because it tends to just bounce back and forth, back and forth, back and forth. Now, if anything, you can see we made, is this all-time highs? No, it's multi-year highs, close enough, I guess, for now, for illustrative purposes. And you did have a thrust down, okay? And you did have a little bit of a pullback. Now, again, I'm not going to short anything. And this looks a little bit thin to short anyway, only 64K today. By the way, I don't know if it's just me, but it seems like in more recent times, stocks are requiring more and more volume to trade. You used to be able to trade a stock with 100K all day long. And nowadays, I don't know if volume is being double reported or what, but I find those stocks around 100K being very, very thin, even 200K or so. So anyway, you can see it did thrust down. It did pull back a little bit. If anything, a possible short. If it did break down, you could see all this trading above it would be hard to get through. That'd be a little bit of resistance, the overhead supply that I talked about earlier. But I would pass on that one. I'm not seeing anything very exciting there. Again, you want to find stocks that trade cleanly. You want to be able to draw a line on the chart that looks something like this. And then your pullback line, of course, would look something like that. So you want a chart that looks almost like that. So one reason, not to get too deep into psychology, but my methodology, obviously, it's fairly simple, and we're looking for these clean charts that tend to just go straight up and persist ideally and accelerate. And what I'm looking for is there's a lot of little things you can look for, but it's really not that complex. You should be able to see a setup, and it should kind of jump out at you like the NNE. You could see it just kind of took off and then had a deep pullback. This is an IPO first deep retracement. Now, one thing I could never understand is why people who are very intelligent, such as doctors and lawyers and automatic transmission mechanics, when I do my weekly webinars, especially years ago when the audience was a little bit more different and less, I guess, less professional people, less people who knew me. But these people were professionals in their own rights, very smart people, and they would show me stock after stock after stock that looks like electrocardiogram. Now, if you have a stock that looks like electrocardiogram today, just feel free to show it to me. I'm not going to beat you up. I'm just going to show you what I like. Okay, maybe there's something that you like. So it's not my way or the highway. But I could never understand why people who knew the methodology, especially, would continue to show me these choppy looking charts, these charts that look like electrocardiograms. And one day, one of my clients, who's a psychiatrist, chimed in and she explained to me that if you're a doctor or a lawyer or automatic transmission mechanic, you've been trained poorly to take whatever comes along. So let's say some client comes along and you could end up doing more damage than good. One of my friends and clients, I should say, he's a doctor and he sent me a picture. He goes, "This is what I'm dealing with today." And I asked him for a picture of it. And he sent me, and I'm sorry that I did, he sent me a picture of a leg about that big around. I don't know how big around it was supposed to be, but it was black and it was gross. And he had to do something with it. So this lady had let herself go so long, she was at the verge of losing a limb. Now, he has to take this client because if he doesn't do anything, this woman could die or at the least lose a leg. If he does do something, just the act of doing something could possibly have her lose a leg or worse, maybe die. So you have to sort of take whatever train wreck, and that's her words, that comes along. And it's a little hard to adjust to the trading world where sitting on your hands is an option. And if you could figure out when to sit on your hands, you can own the world. And believe me, I take a lot of mediocre trades that I shouldn't take. But the bottom line is you want to try to take the best and leave the rest. In your regular job, unfortunately, you have to take, again, whatever trade wreck comes along. All right, next stock, cost. Keep them coming. Oh, fantastic. There we go. Who said that? Mike Harrington. I think I know you, Mike. And now that makes a lot of sense. Okay, this is a good look at stock. Now, the only thing that kind of jumps out at me is the HV. This is historical volatility. This is a 50-day historical volatility. I can give you this formula if you want. It's Landry volatility and stock charts ACP package. But you can see, notice this nice persistent uptrend. Notice the acceleration. Now, usually I won't trade a stock with the HV this low. Let's take a look at the spiders real quick, and I'll just show you real quick. So the spiders are 11. And in order to beat a market, I believe you need to trade stocks with a much, much higher volatility in the overall market. So we take a look at, it might not be a bad example, a good example because it stopped out a long time ago, but let's say KNF. Okay, KNF has an HV of 30. I usually don't go too much below 30. I don't know if NNE has one. Yeah, look at all these pretty lines on this chart. Sorry about that. So let me show you one that's actually not working out for us just yet. So here's one NN. And I like this stock because it really took off in here and then it pulled back. Now, this isn't the cleanest example of a setup, but I did like the way it looked. And our entry was probably right around here. So you can see we're still in the water. So obviously we don't win on everyone. If we won on everyone, you never see my fat arse again, right? But notice the HV is 68, much, much higher than the overall market. Now, getting back to cost. So this kind of jumps out. I mean, see, this is a TKO type of move here. Notice that the market sold off really hard. That shakes out a lot of nervous Nellies. The people who bought like right here, absolute worst traders, right? They're buying late in the game. They get knocked out. And then right here, when this market begins to take off again, they have to put up a shut up. And the same thing happens for the shorts. They get squeezed out. And usually the shorts get squeezed out a little bit higher. And that sometimes could help a market to accelerate higher. So by all means, put this on your watch list. I don't know if this is, I started tracking once again what I call the Landry 100. And what I'm doing here is I'm just tracking the stocks that are breaking out to new highs. And so you can see this one's up 71% since I put it in. It's beginning to correct a little bit in here. This one's 54%. And I'm not actually long these. Well, I'm actually long this one, the NNE, okay? But I'm not long all of these. This is just an experiment. I did this years ago, and it was a very It was a very great thing to do. I learned a lot about momentum. Momentum ends badly. So if we go to the bottom of this list, you can see here's one that got creamed today. So this will probably come out of the list. And I just keep chipping away at it, keep adding in strong stocks and then deleting weak stocks. And that's pretty much the whole methodology for maintaining this list. By the way, I'm always asked for people about stocks that are scraping bottom or headed straight down. And they want to know whether or not they should buy it. It's like, well, a lot of cases, these same people will play like fantasy football. Now, I don't play fantasy football. I'd probably be too obsessed if I got into it. I'm not a huge sports fan, but if I got into it, my competitive nature would make me kind of crazy. So I know not to get into it. But from what I can understand, you don't want to pick the weakest, slowest, stupidest, dumbest players. You don't want a team of dumbasses, okay, that couldn't catch a ball to save their life. You probably want somebody who's really good at catching a ball, somebody who's really good at throwing a ball, maybe somebody who's really good at blocking, okay? So you want to pick the best players, right, for your team. And the same thing goes with stocks. A client years ago had emailed me and said that he was treating his stocks in his portfolio like his children. Well, anything short of mass murder, you're going to try to give your children another chance, another chance, another chance. Whereas you really need to be treating them like employees. And I actually wrote a whole piece just on this. You have to be a bit of a tyrant. And if you think about it, let's say you've got 4 employees and 3 are busting their butt and 1 is sitting on his, well, who's getting fired? Okay. You're not going to fire the 3 that are working the hardest and think, okay, well, they've been working hard. They're probably going to get tired of working. And this guy here, he hasn't done anything, so he's due to do something, right? And that logic doesn't work at all. But in stocks, a lot of people, for some reason, have that kind of logic. So yeah, getting back to cost real quick. Sorry about that. Cost, you can see what you want to do now is you don't want to just buy it because it's making new highs. And that's why I brought out this list here. Now, if you're I'm kind of maintaining an ETF with this. And years ago, I had a client that was interested in making this a professional portfolio. The problem was when you're trading these crazy stocks like this, it's super, super, super volatile. It'll print money for a while, but it'll also absolutely get clobbered when the market tanks, and it'll tank a lot more than the overall market. So probably difficult to actually trade. Plus, it's 100 stocks, so you need a lot of money to spread it out. But it's a really good exercise for showing you where the money is flowing and what the strongest stocks are. And this is pretty exciting to see that NNE is number 2 in my list. IREN, this is a crypto-related stock. So the other crypto stocks don't seem to be doing quite as well, but this one, for some reason, is doing really well. So I would put this on your watch list for a possible pullback. And I know I will. And it looks like it's getting almost past all this little overhead supply here. So hopefully that makes sense. We're trading momentum and we're looking for the strongest stocks. And unfortunately, we have to kick stocks out of the portfolio when they no longer perform. IOVA. Okay. Now, where was this stock and where is it now? Okay. It was up around 18. So it's lost about 50% of its value, just eyeballing it. Yeah, 50, 60% of its value since March. Okay. So the arrow here is pointing lower. One thing that I used to say all the time is if you don't know where a stock is headed, you want to ask a 6-year-old kid. And I stole that from Linda Rasky. And I said it so many times, I give her credit every time, but it eventually became one of my sayings. And that goes back to Linda Rasky. So if you were to ask a 6-year-old kid which way it looks like the stock is headed, it looks like it's headed lower, at least for now. So there's nothing here to get me excited. And again, like I said a second ago, the 30-day EMA can be one of your best friends. Don't buy a stock unless it's above the 30 EMA. And also it has to be set up too, obviously. But you can see this one simple little rule can keep you out of a lot of trouble. So I would avoid that. What was that about some books? I'll give you my books for free. let me just confirm the link. I think it's DaveLandry.com/free book. And if you go there and just put your email in, get to know me first. I do have a Facebook group, but you have to be at least a gold member of DaveLandry.com. So I think it's www free-book. Let me just confirm that real quick. Yeah. And you can get all 3 of my books for free just by going there. And if you have any issues getting them, just let me know, Dave@DaveLandry.com. And if you really want to do a lot of studying, if you go to DaveLandry.com/books-2-read, I have a list of books that are my favorite books on trading. A lot of psychology books there too. All right, FTAI. Okay. Very good as far as trending. Okay. So that's a good look at stock. And it's got decent volume. Now, the only thing it has to do now is set up. Okay. And to set up, it'd have to do a TKO type of move or a pullback. A TKO is just, again, when you have like this sharp sell-off lower that knocks out a bunch of people, sucks at some shorts. So by all means, put this on your momentum list, and let's just see if it made my momentum list. The Landry 100. Nope, doesn't look like it. FTAI. No. But, there it is right there. Look at that. Okay. So it's up 3% since I put it in the list. So this one caught my eye and was banging out new highs, I guess yesterday or recently. And you could see, let's see what the tracking is on. I'm sorry, 3%. Tracking might be a little bit better. Yeah, it's up 9% since I first began tracking it. Okay. But yeah, this one, keep this on your watch list. That's a good look at stock. And look for a pullback or some place to get on the stock. To get in, I should say, a setup, in other words. All right, PWR. Now, in general, you can see the stock is in an uptrend. And one thing I want to show you earlier, and let's see if we can get it up in the background so I could just bring it forward when the time comes. But as I said earlier and often, I believe in keeping things really simple. And one of the simple things I do is what I call Landry Light. And you can see above the 50, I like Landry Light above the 30 EMA, but above the 50 simple is a good way to look at charts and determine whether or not they're in an uptrend. And the more Landry Light, meaning the lows greater than the moving average. And I'll show you what that looks like if I can get this shared over to another screen. Let's see. So let me pop over and we'll share this ACP platform real quick. Yeah, keep the picks coming. We'll have plenty enough time to get to them, I'm sure. I'll make sure of that. Don't worry about that. Okay, so if we're looking at the Landry Light indicator, and this is the S&P 500, and this is a 30 EMA. Now, keep in mind, when a market's trending, everything works better. As I often say, everything works better with trend. And the Landry Light is no exception to that. But you can see right here, this nice green. This just counts the number of bars that the low is greater than the moving average. And for stocks and crypto in general, I like to look at a 30 EMA. So you can see that we've been in a fantastic uptrend for quite some time. This little pullback here is what I call a Landry Light pullback. And again, I like to keep things super simple. So in this particular case, the market rallies, and then when it pulls back to the EMA, that's a potential spot where you might want to get in, okay? All right, let's take a look at some more stocks, and then we'll keep it going. Yeah, I'll get caught up here. All right, so let's get back to the TCs. Okay, next one is BSX. That's Boston Scientific. Yeah, that's a pretty good look at stock. The HV kind of jumps out at me as being a little bit on the thin side. low side, I should say. HV 17, S&P 500 right now is about 11. As I said earlier, in general, I like to trade stocks that have an HV, at least right now, above 30. Okay. But it's not bad looking. You do have this one big gap here, which is a good thing. Don't get me wrong, because it's in the direction of the trend. Ideally, I like to see most of the trend, not just the gap. Okay. So you can see this gap is probably at least half of this trend higher, but it still looks okay. Don't get me wrong. And you've got a bit of a shallow pullback. I'd like to see a little bit deeper pullback. And if it pulls back deeper, then you pull it back into this consolidation here. So I would pass on this one. But as far as a good looking stock that's headed higher, this is definitely one. Maybe keep it on your watch list. It's just not set up for me. Intuitive. One thing I find about this stock is it does, longer term at least, tend to trade all over the place. It doesn't trade that cleanly. HV is a little bit on the low side, but keep in mind, obviously, that stock personalities can change. Okay. So now we've got a decent uptrend. We're breaking out to what I believe to be all-time highs. Yep, all-time highs. So maybe on a pullback, okay, if the stock begins to pull back a little bit, it might be worth a shot. But that's definitely one that you want to keep on your momentum list. So good eye on that one. I've never really had any luck trading this one. So it's just not one of my favorites. But if it does set up nicely, I might go after it. But you can see right now, HV is a little bit on the low side. I'm still finding setups at much higher HVs. So I don't see any reason to drop down to the lower volatility stocks. I did an article called Better the Devil You Know. And in that article, I showed that, at least with my methodology, this hybrid approach to money management, you're much better off trading more volatile stocks within reason and using a looser stop and fewer shares than you are trading less volatile stocks with more shares. You need more shares on less volatile stocks to capture the price move, okay, to capture percentage wise. So hopefully that makes sense. But if you read the article, you'll see the spreadsheet that is set up that shows you. I know I'm getting excited. You want to part of me, right? I'm talking about spreadsheets, but it's very dangerous to put on a lot of shares, which you have to do if you're trading a stock that's lower in volatility. Plus, you're putting up a tremendous amount of margin. Now, QCOM is going to be a great trading stock. QCOM's in the Landry list. It's up 10% since we put it in. I just started this a few weeks ago. But you can see, look at that, accelerating nicely to brand new highs. You don't just want to jump in and buy it unless you're putting together a momentum list like this. And again, I'm not actually trading this, but that's the cool thing. And I know, again, you want to party with me, but that's the cool thing about keeping a momentum list like this. You could see things really take off, like this Core Scientific, the NNE, which knock on wood, we're actually in. But yeah, on a pullback, Qualcomm is looking pretty good. NVIDIA, obviously, would be one that's looking really good on a pullback, of course. I think AMSC, it could be a new NVIDIA, and the next NVIDIA, I should say. One of my clients was like, well, you're looking at their manufacturing, you're looking at their plants. What are you looking at? What are they making? I'm like, I don't know. I have no idea. I'm just saying it's a stock that's beginning to take off nicely, and it looks pretty good, beginning to accelerate higher. So something like AMSC needs to be on your momentum list. If it begins to pull back, it might be worth a shot. UNG, that's going to be a natural gas company, right? That's actual natural gas. Okay. Now, this looked pretty good. Let's back this out a little bit. There's some great things here. I'm glad you brought this one up, Nat, or Nate, whatever you are, whoever you are. Is it Nate or Nat? Let's take a look at the bow ties here. There's a few things I want to show you. Okay, so bow ties, when you have the moving averages come together really quickly over a short period of time. And I'll show you a little indicator that I have for this too. First, next impasse we get to. So you want to trade the first pullback. So you also have, in this particular case, you have this big fat cup and handle, okay? And then you have this nice little pullback. So that looked really, really good coming out of that cup and handle formation. Now, if you were long, you'd probably still be long this one. But see, that looks like a pretty good setup. Now, there's two different type of setups that I trade. One is trend transition, and this would be trend transition, something that's in a longer term downtrend, bottoms out, begins to rally, you trade the first pullback. And the bow tie is probably one of the best patterns for that. And I've had a lot of people who know a lot about markets tell me they've confirmed that. Now it's kind of this pullback into a pullback. I'm not as excited about it now. I don't like markets. I like markets to stack the pullbacks on top of pullbacks. So sometimes I'll be long a market. Let's say a market pulls back, and let's say I get long here, and then it takes off. Okay, so I'm long, and then maybe I'll take some profits along the way, but then the market pulls back again. Then I look to get long maybe here again. Okay. Now, if I'm looking at a market and it looks like this, it pulls back and then it takes off and then it pulls back again. Okay. Well, I'm not as excited about a market like that. In fact, I'm not excited at all because it has a tiny bit of a double top to it. But this longer term still looks bullish. Okay. Shorter term, I'm concerned about this pullback until pullback. So I would pass as far as new setups. Now, it's a long ways away and a good problem to have, but you can see it does have quite a bit of overhead supply. But that would be a good problem if this stock rallied that for this ETF in this particular case. MNMD, oops, look at all them pretty lines. Okay. Now, like I was saying, the 30 EMA could be one of your best friends when it comes to trading. And notice that we're well below that 30 EMA, okay? So I would pass just based on that. But all the other things I've been talking about since we started, such as, let's see what the measurement is on this. So this thing has dropped 40%. Again, we want to go for the strongest players, right? The as mentioned earlier, the QComs, ISRG, what's the other ones? NVIDIA, of course, SMH by itself. Okay. So when you're in a market where you have a sector that looks like this, okay, and I'm not beating you up, okay, I wouldn't waste my time with a stock that looks like that. Okay. So again, not beating you up, just kind of it's not my way to highway, it's the way I look at it. All right, NDX. All right, now we're coming in. Okay. Okay, now see, this looks good. Well, this is the NASDAQ, okay, or the NASDAQ 100, same thing as the Qs, right? Is there a stock in NX? Oh, NDX, okay. NDX, okay. Yeah, so that's the Qs, so that's the NASDAQ 100, I should say, QQQ. So yeah, I like the Qs. So again, and thanks for bringing that up because this makes my point. When you're in a market where the Qs are pretty much going straight up, the NASDAQ's going straight up, semiconductors going straight up, there's a few questionable, more than a few, but there's a few questionable sectors out there. But there's so many good looking areas. On the next pullback, we should see a plethora of setups. eBay. Okay, well, this one looks like it's trying to break out a little bit. The volatility is a little low. It doesn't do grandiose things. It tends to chop around quite a bit. But I hear you. It looks like it's on the cusp of trying to break out. Now, I'm not a breakout trader, but this certainly looks a lot better than some of these stocks that have gone straight down since March that we looked at earlier. So maybe put this on your momentum list. Again, I'm not a breakout kind of guy unless I'm trading intraday or something. Or if I'm trading crypto and all of the altcoins are running, then I might be willing to trade breakouts. So I would pass on that one based on that. NMIH. Okay. So you can see this one here, kind of choppy, kind of sideways. It did break out, but then it pulls back into where it broke out from. So maybe put this on your momentum list, but this doesn't excite me too much just yet. For this to excite me, it would have to make new highs and keep making new highs. So it's a little wide and loose. It takes off and then it chops around and sells off fairly hard. I know in general it works its way higher and it looks like a great momentum stock, but when you kind of pick it apart, it has some issues. FN. Now that looks pretty good. Okay. So now we're making brand new highs here with this particular stock, FN. So that's certainly a good thing. It's not set up at the moment. You can see it did kind of rally out of a pullback. Okay, I do trade pullbacks. This one was a little choppy. It probably wouldn't have excited me as a setup. In fact, I would have seen it recently in my scans, but it looks okay. And I think it should be on your momentum list as a potential candidate. But of course, if and only if it begins to set up. FLR is going to be with Fleur. This one looks okay as a momentum stock. The HV29, which is okay. You could see it was kind of wide and loose and sideways, but it did break out of that range. So for me to get excited, it's going to have to begin to maybe accelerate higher and then look to trade pullbacks. Okay. So as far as a momentum stock, easy for me to say, absolutely should be on your list, but there's nothing for me to get excited about at this particular juncture. And by the way, I don't want to sound like Mikey. I hate everything. I'm very selective when it comes to stocks. I think one time, I forget the exact days, but I have a daily trading service where I put out recommendations every day. Well, sometimes there's nothing to put out. So I'll just do my market commentary and explain why I'm not recommending anything. And that's because there's nothing that excites me. The stocks are choppy, sectors are choppy, the markets are choppy. And there's nothing that I want to go after. And I think, don't quote me on this, but I think it was like 53 days I went without any setups. And it doesn't always work this way, but the next several setups did incredibly well. And that's the bottom line, is that you really need to be patient and wait and wait and wait and wait, and just not take whatever comes along when it comes to trading. So if I leave anything with you today, I think that's something important. Now, since we have a few minutes, let me jump into, I want to show you a couple of things. So let me get this shared real quick. And yeah, keep the picks coming. We have a few more minutes, so I'll be happy to take a look at anything you want me to. So getting back to the Landry light. So we take a look at, like, just pull one of those momentum stocks out the air, right? Like the video, okay? You can see that we've had a tremendous amount of Landry light for a long, long time. Just taking a second to update. But you can see, notice that you've had all this Landry light in here. And this is where the lows, again, are greater than the moving average and not intersect the moving average. So that's obviously a good looking stock. And then also, by the way, this is a good testament for stocks that trade cleanly. Notice that it traded very, very, very cleanly. In fact, this was a beautiful setup back here. Unfortunately, the gap, it would have been hard to get in because it had this gap. But notice how it almost pulled all the way back to the 30 EMA, and that's what I call a Landry light pullback. So let me show you one of those real quick. Now, initially, because this was a new issue, it didn't have a Landry light pullback. But then once there was enough data out there to get a 30 EMA, it then became a Landry light pullback. Okay, any more stocks while we're waiting? Yeah, this is really slow, so I don't know what's going on here. It's probably because it's going through Zoom and everything. There any sectors you guys want me to look at, or markets or anything? This thing looks like it's stuck. Let's see if we can get it to wake up. While we're waiting on that, if you guys need to reach me, here's all my contact information. Let me do a new share real quick while the stuff in the background catches up. Marijuana overview. Okay. So here's all my contact stuff. I don't know if this is recorded or not, but if you need to reach me, davelandry.com/contact or david@davelandry.com. And the weekly webinars, again, I do these live webinars. You're welcome. Good stuff, Dave. Thank you. I do these live webinars every week. You can register at davelandry.com/webinar. So Shell wants me to go take a look at the 420 stocks. So let's do that real quick. Now, 420 stocks were beginning to take off, but unfortunately, they came back in. So let's take a look at, I guess, weed would be a good one. And I'll get to my, whoops. Okay. So they were trying to get going. Unfortunately, you can see once again what's happened since May in this particular case. These guys have headed lower. Okay. And again, your 30 EMA can be your best friend. And let's take a look at, I think YOLO's another one. Okay. Same kind of action happening there. So that's headed lower. I think I recommended CGC when weed was taken off. And we might have made a little bit of money, but then it stopped out, and then that was it. So it was kind of a one and done. So a bit of a bummer. This was a little unorthodox for a stock I would normally recommend, but I did like the way it took off and had this deep pullback. But unfortunately, again, you see how the pullback was into the prior pullback, like I said earlier. U.S. is slow to legalize. Yeah, and I think the declassification or whatever it was, and my favorite one of my favorites, I should say, sayings is don't confuse the issue with facts. What is the chart going up? Is the chart going down? Is it going sideways? And a lot of people got really excited when they were going to declassify it or whatever you call that, where they knock it down or up. I forget. It was a Schedule 3, and they wanted to bring it to Schedule 1 or vice versa. And all these weed stocks got a nice little pop, and we were able to ride it out. In fact, we were in it on this. That's now to remember. We were in it on this day here where it took off a tremendous amount. It hit our initial profit targets, but unfortunately, it stopped us out. I'd rather have a longer term trend and sit in it for a year than one exciting day. Okay. Bad weed in the US or bad weed in general? Okay. We just have a few more minutes. So let me just see if I can get it, squeeze a little bit more in and then keep the picks coming. I'll try to do those too. How is HV calculated? I'm not smart enough to explain that to you, but it's like the log of the net day over day change, and I'm using the 50-day. So 50-day HV, and again, I'm gonna get in trouble trying to talk statistics with you. But statistically, there's a 2/3 chance based on the HV, and this is an annualized number. So it's a 50-day number. I like the 50-day, and I could show you the formula. IntelliChart is huge. In ACP's platform, it's called Landry Volatility. It's not mine. That's just what they named it because I told them that's what I wanted. So you could do a little Natenberg. There's a guy by the name of Natenberg, Sheldon Natenberg or Natenberg Sheldon Natenberg, I think is his name. If you really want to get into the weeds on that, just know that it's a standardized method of measuring volatility. So I know that this CGC is 173, S&P 500 is 11, okay, based on the spiders. So this is much more volatile. Now, in theory, as I was getting to a second ago, there's a 2/3 chance that this is going to be 173% higher a year from now or 173% lower, all things constant, which they aren't in the market. So that's one way of kind of wrapping your head around HV. If you have Telechart, I'll give you the formula for HV. I think I have the Metastock one lying around. I do have built-in indicators in Telechart. No, not Telechart. In ACP, which is Stock Charts platform, and the volatility is in there. I have built-in indicators in Metastock, meaning that you get it with the software, and HV should be in there. And if you need for Metastock, I could give you that one. You'd probably be better off just Googling it and getting the formula yourself. But I'll be happy to share anything I have. What are the indicators I'm using? Yeah, 10, 20, and 30 EMA. 10 is simple. The 20 is exponential. And the 30 is also exponential. So we got a few minutes left. Dave, do you wrap up a little early for the next person, or do we just go until time is expired?
Yeah, you can keep going for a few more minutes.
Okay, fantastic. Okay. All right, let's just go quickly back to I want to go quickly back to this ACP. I want to show you as quickly as possible something that another one of the things that I do to keep things simple. No, here we go. Here's a KNF. So, like I said earlier, this is a Landry-like pullback, okay? in the KNF. So notice that this stock took off, that it pulled back to the EMA. That's a great little pattern to look for. Now, let's take a look at the Qs. I have a little simple system that I use for the S&P 500, and just for S&Gs. And again, you probably want to party with me. I bought 100 shares of the Qs on the last signal. So the last signal was back here, and I got a fill for 100 shares at 319.49. And knock on wood, it's a pretty good run since. And let me just show you the zones real quick. We just have a couple of minutes. I'm going to squeeze it in real quick. We take a look at these zones, and the green zone, the bottom of the green zone is 5% away from the 50-week closing high. And then this is 5% or more away, and then red is 10% or more away. So the sell for this system is a close below the 50-week moving average and a close 10% or more away from the 50-week closing high. And the system is free, okay? So don't don't look for your money back if it doesn't work. But knock on wood, this simple little system, and I developed it maybe 10 years ago, maybe a little bit less. But going all the way back throughout history, it would have kept you out of every bear market in history. And that's a TFM 10% system. And I have some tweets on that. Also, my YouTube channel, youtube.com/Dave Landry, if you want some more information on that. So that's simple little system. And then let me just show you real quick the Landry light. So Landry light is just lows or greater than the moving averages, or highs are less than the moving averages. And as a general statement, not that you want to trade this mechanically, but as a general statement, as long as the market is generally above the 30 and you have green Landry light, you want to be long, like you would be now. Okay. See this little dip down? That's a Landry light pullback. Okay. You want to get long when this begins to rally out. So you want to be long from back here, obviously. And when you have the red or green and red flipping back and forth, you want to stay out of the market. Okay, any more stock picks? Any more questions? Anything? I'd be happy to. We got about 1 minute left. Oh, you're welcome.
Yeah,
We'll go and wrap it
go
up.
ahead and cut you off there. Yeah.
Okay. Well, thank you, Dave, for having me. I appreciate it. It's great to be back. And
Yeah, great
obviously,
having you.
yeah, thank you, and obviously, thank everybody for attending today. I'm very very impressed. Lots of interest. So thank you all so much.
Yeah, well, hope we can have you back soon.
Be happy to be here.